Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities, and E-mini S&Ps just keep on going higher. Another new all-time high. Despite some mixed vehicle sales we got today, it seems that automakers are going to have a little more difficulty selling the numbers they want to hit. Not only did they last year, but likewise in 2018. But that didn't slow stocks down, and the market just keeps extending to new highs. Possibly with the lack of alternative items to buy. If you look at bond yields in 10-year, they're hovering around 244. So those have kind of stalled a little bit, but I think right now equities still remain in favor. The technicals look very bullish, and if you listen to what the Fed had to say today in their minutes, they suggested slow and steady wins the race, and gradual rate hikes will continue, and that is something that will feed the stock market at least until it doesn't. And while inflation is talked about a lot from the Fed, we haven't seen it yet, and that also helps keep equities fueled. So equities really seeing no sign of pulling back, and even if they did see a modest pullback, you know there's a lot of cash on the sidelines still waiting to jump into the market or at least get back in. So right now equities moving higher technically and fundamentally. What has that done to volatility? Well, it's still on vacation. We haven't seen any real upticks in volatility of any sustained period for quite some time. In fact, today the VIX index is hovering just above its November 2017 low, one-year low. So we are really seeing, the conditions such that there isn't any fear in the market, there isn't any concern in the market. You can throw out tweets from the president to North Korea. That doesn't seem to have any effect on the volatility index, and volatility just has become the new norm. As long as the Federal Reserve remains in play, yeah, I know they're trying to unwind the balance sheet and they're raising rates slowly but surely, but they are still heavily involved in the markets. There is no real fear that things can go wrong. So right now, equities keep going up, volatility keeps going down. So what do we have to look forward to that may change some of that? Well, Friday we have the U.S. employment report for December. Yeah, it's expected to be rather bullish with strong non-farm payrolls, as well as unemployment still seeing a modest downtick. The key here is average hourly earnings. That's the one number that could possibly throw a wrench or stall equities from moving higher as quickly as they have been. Those have been hovering around 2.5%. The Fed would like to see that number move higher, at least to prove there is inflation. All inflation begins with wage inflation. So right now, that is a number that will be closely watched. Next on the list of things to watch, obviously, we've got a few things down the road. We've got January FOMC, which will be Fed Chair Yellen's last meeting to oversee. Then we pass the torch on to Jerome Powell. Then he takes over, and before he can really even get comfortable in the chair, he has to sit in front of Congress and give his semi-annual, what is formerly known as the Humphrey Hawkins testimony in mid-February. So some things on the radar that could throw a wrench into equities, but right now it seems steady as she goes, unless we see a wrench in the thrown into things with a very weak employment number. Although anything that's weak in economic talk, when you talk about tax reform, whether you're talking about the data itself, it's really a fuel to stocks, because as long as Treasury yields stay where they are, yeah, they're up a little bit, but they're still relatively low on a historical basis. That is going to continue to fuel stocks. Plus, we haven't really seen a pullback that would scare people into selling their equities. Right now, pullbacks have been used primarily as buying opportunities. So equities remain technically bullish, fundamentally bullish, and there's really nothing on the horizon that I can see that would jostle that, other than something that we don't know is going to happen. And right now, those are the kind of things that we haven't seen in the markets in quite some time. So right now, bullish equities heading into Friday's employment report. This is Todd Colvin coming to you from the floor of the CME Group.